What's going on, guys? Welcome back to Frunkla. So the market is going to be closed on Monday. Okay, Monday is the 21st of February, which happens to be President Day. Exchanges, US stocks, Chicago Board Options Exchange is going to be closed the whole of the day. So don't expect Bngo to open on Monday. And then on the for commodity side, okay, oil, gas, because we have a lot of things going on right now between Russia and Ukraine. So oil and natural gas and other commodities such as gold, silver, platinum, copper, palladium, the trading is going to be altered around 7:30 p.m. till 11 p.m. So I think it is more or less okay for indices and commodities, but for stock, the stock market is going, the US stocks are going to be closed on Monday. So this right here is the situation of the market as at the closing on Friday. Year to date performance of the stock market, as you guys can see, technology stocks are suffering heavily, guys. I mean, you have the likes of Microsoft, okay, down about 14.39% year to date. And then you have the likes of Google, Amazon, all of them are all down. And then when you come to Tesla is down almost 20% year to date. I remember last year when Tesla was down about 25%. Okay, I bought the dip and Tesla recovered back in 2021. So I am watching Tesla to see if perhaps it's going to be down again, towards 25% then I can buy huge dip once again. So if you take a look at where money has been flowing into in the market, okay, for the past, since the beginning of this year, you guys can see that energy sector is where the money is moving into. Okay, money is flowing out of all these, software companies, flowing into energy sector, okay, oil and gas sector, and a little bit into financial, a little bit into banks regional, because right now currency are becoming strong and strong. Whenever you see money flowing out of the financial market, okay, out of stocks, most of the time it goes back to the bank account, okay. And then right now energy sector is booming because of the conflicts between Ukraine and Russia. Okay, a lot of people are predicting if Russia is going to invade Ukraine or not. That is why, of course, the price of oil and gold has been skyrocketing, and natural gas is more or less stable for now. So this right here is the situation of the market. Now, if you go to diagnostics and research, healthcare diagnostics and research sector, where you have the likes of Bionano Genomics, they are down heavily, year to date. Okay, this is Bionano Genomics right now. Look at that. We are down minus 32.44% year to date. Okay, and Bngo, I saw Bngo somewhere around there, but I cannot find it right now. So that is more or less the situation of the market right now. Year to date, a lot of stocks are taking beating. In this video, I am going to show you guys what is moving the market, why investors are fleeing the market, and when they will possibly come back into the market. That is, of course, what we're going to talk about in this video. And also, I want to discuss what other investors, analysts are saying about Cathie Wood, okay, because Cathie Wood, she has a fund, she has several funds, and in her funds, that is where you find most of all these growth stocks, okay, the likes of Bngo, for example. Illumina, used to be there, but they sold off. The likes of Intelia, Editors, they are all in ARK Invest funds. Okay, so we are going to talk about what all these analysts are saying about her fund, and hopefully you guys can learn one or two things. So let's get right into it after the intro. What up, investors? It's your boy Dayo. Welcome to Frunkla Investment, where I talk about Bionano Genomics on a daily basis. From Sunday to Sunday, I try to post at least one video. If you would love to learn more about Bionano Genomics, this channel is for you, okay? Feel free to subscribe to this channel, join other members of Bionano Genomics, those that are also invested in this company, and come here on a daily basis to learn more about their investment in this company. Whatever I show you in this video is just for educational purpose only. The financial market is a very dangerous place and you can lose a lot of money. Always do your own due diligence. Don't sue me, bro. Let's get to it. All right, guys, so the big reason the market is right now super negative, okay, even though the likes of Bionano Genomics has been selling off heavily since last year, February 16th, okay, after we set that all-time high around 15.67 US dollars, we have a lot of stocks that are taking massive beating this year alone. Okay, of course, Bngo is down about 32%, year to date. But still, we have a lot of tech stocks, like Facebook, like Shopify, for example, okay, like Palantir, they are selling off heavily. Most of them are down over 40% right now. Now, the reason, of course, is one of the reasons, of course, is because of the conflicts between Russia and Ukraine, okay, and you guys have to remember that tomorrow, 21st of February, is when the Beijing Olympic is going to end. And according to the president of United States and some other experts, they are predicting that Russia is likely to invade Ukraine after the Olympic. Okay, so tomorrow is when the Olympic is going to be over. Next week is going to be super tough. The market is closed on Monday, so we have a lot of things right now, just going into one another. We have inflation according to the last CPI reading. Inflation is right now about 7.5% or so, and then we have the this interest rate coming. We have Fed decision that is going to come on the 16th of next month. We have so many things right now that are messing the market up. Now, if you go down a little bit, according to this article, the title says stock market news live update, stocks renew declines as Russia-Ukraine tensions ramp. Now, if you come down, I want to share some key points with you guys so that you can know what is going on right now in the market. Okay, now if you come here, the soaring in sentiment came after US officials said they estimated Russia had built up around 190,000 military personnel near Ukraine. Okay, now it goes on, it says, and this came a day after President Joe Biden told reporters on Thursday that the threat of a Russian invasion of Ukraine was, I quote, very high, end quote, in the coming days. So, of course, that is affecting the price of oil. Okay, now if you go down a little bit, these are what some analysts are saying about the situation of the market and, of course, why they are not putting their money in the market right now. I quote, this person says, we have gone from thinking the Fed would very, very deliberately, deliberate. Once again, we have gone from thinking the Fed would be very, very deliberate in their actions starting in March and telegraph everything, to having some outliers on the committee talking about being very aggressive, a lot more aggressive than what is priced into the market. He had it every day. The story changes a bit. Now, if you go down more or less, I mean, before Ukraine, Russia-Ukraine situation came in, it was always about the Fed, what they are going to do, how many times they are going to, hike the interest rate in 2022, and so on and so forth. But right now, it's all about Russia-Ukraine. Now, check this out, guys. I quote, really, it's about Russia and Ukraine, and it is about the Fed. And on the geopolitical side, I think the challenge for investors is that geopolitical risk is just really hard to weigh. Okay, James Liu said that. And then he continues, he says, our view is that we are not yet in a situation where it makes sense to make any real portfolio moves based on this. I mean, first of all, diplomatic channels are still open, so the situation is still evolving, on a regular basis, end quote. So, most of all these huge guys, the waves, okay, institutional investors are sitting on the sideline right now. They are not investing their money. Most of them are waiting to see what this decision of the this Russia versus Ukraine situation is going to be. If US and the West are going to sanction this, if they are going to sanction Russia, okay, based on what Russia is going to do in the coming days, or if they are not going to sanction them, if Russia is going to invade Ukraine or not, that is what most of all these guys are waiting for. They are all waiting for answers. Now, I quote, this person says, the challenge is that even if the worst case scenario were to happen, it is hard to gauge exactly, what the impact long term would be on the market, end quote. So, I mean, the situation of the market right now is the sentiment is very, very negative right now. Okay, let's go to the next page. All right, guys, so shares of Bionano Genomics closed down, almost 1% on Friday. We are back just above the $2 level. We broke it slightly on Friday. We went as low as, okay, $1.96, and then we came back to, $2.08, the maximum, and then we closed around $2.02, down about 1%. Okay, Bngo has been selling off heavily, okay, since last year, okay, when we set that, all-time high around this level, February 15th. And then, right now we are down to $2. So the market cap right now is around $584 million. Of course, investors are more or less still holding on to their shares, even though the value has been, selling off heavily. I believe a lot of activities are also happening, in the dark pool. Okay, most of all our largest holders, I believe, they are also renting out their shares to, short sellers. So that's more or less what is happening right now with Bngo. Nothing really significant has changed about, the company apart from positive things. Okay, the company is executing their plans. Nothing big has happened so far. I believe it is, more or less like it used to be. Okay, they are just improving, selling more devices, adding some head count and so on and so forth. So we don't really have anything. This is not about, okay, the company. It's not about the stock. It is just the situation of the market right now. Okay, that is of course what is going on. So we just have to wait and see what's going to happen next. Now let's go to the next page. All right, guys, so to end this video, let's take a look at what this analyst, okay, this CNBC analyst and whatever host, they have to say about Cathie Wood. The title of this video is Cathie Wood's portfolio really extremely undervalued or not? Okay,
here's a look at ARK, down 58%, we'll call it, off the year high. She was with us yesterday. She defended her stock picking prowess. She defended her research. She was defiant in terms of saying, yes, these stocks were in a bubble. And she claimed, Benny, you're in deep value territory. Listen.
We believe our portfolios are extremely undervalued. You have to have a 5-year investment time horizon. And if an investor is looking for returns over the next quarter, the next 2 quarters, we can't promise them. Nobody can promise them. That's a macro call these days. However, if you give us 5 years, I will tell you, we are running a deep value portfolio.
Steph, she said, we right now have, quote, one of the most misallocations of capital in the history of mankind. Conversations about valuation don't seem to really matter with Cathie Wood. She maintains this 5-year time horizon. So checking her on a lot of stuff like that remains difficult, right? Because it can always be the fallback. Well, our time horizon's 5 years, so who cares what the stock does now? If you buy these stocks today, you're going to be supremely happy in 5 years because you've made a tremendous bet on innovation, and anything but that or seeing it that way, you're simply missing the boat. I'd love to get your take on the points that she makes here about a lot of these stocks, which many of our viewers have owned and unfortunately have ridden down so far.
Yeah, I mean, anything can happen in 5 years' time. That's impossible to gauge, right? So momentum is really good on the way up, but on the way down, you're catching a falling knife. There's no valuation support. And so when you're looking at price to sales, total addressable market, which I have also done in terms of trying to see big picture and where their market share of certain companies can go, But the market doesn't want that right now. They don't want the non-earners right now. There's no way to value these companies other than to think about out in 5 years what the markets are going to look like. And again, especially in technology, things can change on a dime. I mean, look, you go back to Amazon. It's actually trading at 45 times earnings. I think that's one of the cheapest it's been in a very long time. And that can't get out of its own way because the investors in the market right now, they're not rewarding high multiple stocks. Maybe they will, especially if the economic growth slows. Maybe we get back into growth. But right now, I think these stocks, there's no way of knowing how much they're going to go down. And I hate to pile on because I do think she's very bright and I do believe in a lot of the things that she says. However, I don't even have a 5-year time horizon. I don't think that's a prudent way of investing, quite frankly.
I mean, if you just look at some of the stocks, right? Not everything is going to get a 5-year time horizon. There's just not enough patience to go around to sit on big losses and stay with the program. Josh, I got Palantir, sold about 5 million shares of Palantir. That's after loading up on it in recent months, and that's with an earnings report and a stock that's gotten absolutely obliterated. There it is, 63% off of its high. That's on Roku, which is in the innovation fund. She defended it yesterday. That's a stock that's well off of its high. Look at that, 77.5%. That takes us to DraftKings, which is another stock that's absolutely getting hammered today. You take all three of those in context of the greater Cathie Wood's story, and I'm wondering what you make of it and the conversation that we had yesterday, in which I know you heard all of it.
You know, there's a dynamic in play here that there really is no precedent for. One of the things that ARK is doing that's different from every other active manager in history that's ever gotten to 50 billion in assets is they're playing poker with their cards face up. Every night, we know what all of ARK's trades were. We know what they're adding to. We know what they're selling. That's why you guys in the media cover ARK so much. So it actually was working in their favor on the way up. They would announce that ARK just bought XYZ stock, and a whole army of retail traders would get that news from CNBC, Bloomberg, MarketWatch, Yahoo Finance, and that would almost act as amplification, driving more people to buy those stocks also. And so there was like this halo effect of ARK's latest buy is whatever. So that was great. That went really well for a long time. Raised a lot of money that way, raise your profile, et cetera. But unfortunately, we're seeing that same process works in the reverse. So everybody knows their holdings, and everybody knows that there are redemptions and that there's money coming out. Not every day, but everybody understands that they're not raising 10 billion a month or 10 billion a quarter the same way they were in 21. So if you know that and you're a trader, you have the ability to shoot against those holdings, and you have the ability to even press shorts on those holdings, depending on your level of sophistication. So we've never seen that before. You think about a famous active manager like a Bill Miller, even if he gets himself into trouble and the Legg Mason Value Trust has net redemptions, you don't really know what his holdings are or what his trades are, because he's filing 45 days after the end of the quarter. So a transparent, actively managed ETF has this additional handicap that works against it in an environment like this.
Right.
And I don't know how that spirals.
All right, guys, let me know what you guys think about this. Do you think Cathie Wood of ARK Invest is wrong? Do you think it is a good idea that they used to show their place every day after the market closes? You know, everybody can see what they have been buying and selling, and which, of course, is somehow affecting the likes of Bionano Genomics, okay? Because, you know, we have the likes of Bngo right there. We have the likes of, you know, 10x Genomics, okay, in the ARK ETF funds. So what do you guys think? Let me know in the comment section, and please consider subscribing if you are not yet subscribed, okay? And consider becoming a member of the channel. It costs about 99 cents. I have I have one video I'm going to be posting just for the channel members alone, okay, which I'm going to be explaining when I believe Bngo is going to skyrocket, because I have been following all this news, you know, closely for weeks now. So I want to share some deep details with you guys, but for only the channel members only, okay? So let me know what you guys think about this in the comment section. I remain your boy Dayo. This is Frunkla. See you guys in the next video. Ciao, ciao.